and therefore chamber had given me an opportunity to discuss some of the issues involved in dealing with these three sections in the Income Tax Act. So I must be thankful for the organizers for giving me this opportunity. Now getting into the topic proper, we will have to discuss primarily these three provisions, and in association with that we may need to also look into provisions of 44AA, AB and other disallowance related provisions and the deeming provisions and related TDS and penalty provision if time permits. Now, subsection 1 of 44AD, all of us know very well. This is the provision which charges to tax the presumptive income of the assessee. And to have a recap, we'll quickly run through the text so that the important phrases could be taken up for our discussion. So it starts with the non-obstant clause. It says, notwithstanding anything to the contrary contained in section 28 to 43C. It has got two important phrases which have been defined in the law. One is eligible assessee engaged in eligible business. So who is an eligible assessee we have to see here, and eligible business also we have to see. A sum equal to 8% of the total turnover on account of such business, or such a sum higher than the aforesaid sum claimed to have been earned shall be deemed to be the profits and gains of the business. Such business is what the law attempts to say. Now, this starts with a non-obstant clause. So whatever is mentioned in section 28 to 43C will get removed, and what is mentioned here would apply. And it will apply only for an eligible assessee engaged in eligible business. Now, what the law requires is 8% of the total turnover gross receipts on account of such business. Here the language does not say in such business. It says on account of such business. If we recall section 44AB, clause A, every assessee engaged in business, his total turnover gross receipts exceeds 1 crore, exceed 1 crore. There, in business is what the language used. Here the language used is on account of such business. Whether that by itself would trigger some controversy, we will take up something later, but the language here used is on account of such business. This is something which we need to take into. Then the law provides for offering 8% and such higher sum claimed by the assessee. Now, who is an eligible assessee? Eligible assessee means an HUF of individual partnership firm being resident other than LLP and not claimed any deduction under section 10A, 10AA. Now 10AA is the only provision, rest all became redundant to a certain extent. And chapter 6A under the heading C, deduction in respect of income. We know well that chapter 6A has got heading A, B, C, D, 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 E, etc. Here C deals with deduction in respect of income, but B deals with deduction in respect of certain payments like 80G donation, 80C insurance premium, etc. When assessee claims anything as deduction in respect of payment, that assessee would not be debarred from claiming the benefit of 44AD, whereas a person who claims any deduction in respect of income like 80IA, 80JJ, etc., those people would not be able to be considered as eligible assessee. So an eligible assessee means an individual HUF partnership firm other than LLP, all being resident, but should not have a claim under 10AA or chapter 6A dealing with deduction in respect of certain income in the relevant assessment year. What is an eligible business? Business means any business except the business of flying, hiring, leasing, goods carriages referred to in section 44AE, whose total turnover gross receipt in a previous year does not exceed 2 crore rupees. Originally, this limit was synced with 44AB limit, but one point that 44AB limit was 1 crore, whereas this limit went up to 2 crore. So therefore, between 1 to 2 crore turnover, if a person is willing to take the benefit of 44AD, no problem. Otherwise, what will happen in between is something, one area which we may need to discuss. We'll come back to that little later. Now, 8% was the original number introduced in the law. That has been relaxed to a certain extent by saying 8% shall be substituted by 6% in case the receipt of the consideration for the goods sold or the services rendered through account pay check or a draft or ECS method or any other method prescribed like IMPS, BIM, etc. on or before the due date before specified under 139(1) of the Income Tax Act. So in case the proceeds on sale of goods or rendering of service has come up in the methodology of account pay check or any other banking methodology, instead of 8%, 6% is permissible, so long as the payment has come before the due date of furnishing return. Now, if the balance outstanding on 31st of March, at least before the due date of furnishing return encashed, received, before the due date of filing return in account pay crossed check, or before the end of the 31st March itself, the money received in through account pay crossed check, etc., then on that turnover 6% is sufficient. The assessee claims he will be entitled to come under this provision. Before the financial year, if the assessee has received not in this methodology, 8% is required. After the financial year, before the due date of filing return, if he receives in this particular methodology prescribed, then 6% sufficient. If it is received other than this, 8%. But after the due date, whatever is received, irrespective of whether it is received through banking channel or otherwise, that income therefrom, at least 8% should be offered by assessee to be eligible to fall under this particular provision. Now, all along, the language here used is only business, such business, eligible business. So therefore, it would give us an impression that only a person engaged in business would be entitled to get the benefit of this particular provision. So section 2 clause 13 of the Income Tax Act defines business to include any trade, commerce, manufacture or adventure or concern in the nature of trade, commerce, manufacture. And also section 2 clause 36 defines profession to include vocation. So many occasions income tax law, although asks the assessee to compute the income from business and profession as specified in chapter 4D, the difference between business and profession continue to be maintained, and the courts have also recognized the principle that business is different from profession to a larger extent, except where the line of demarcation is extremely thin. In all other cases, by and large, business is considered to be slightly different and profession is considered to be different. And although the method of computing income from that particular activity is discussed in chapter 4D, all along the difference is sought to be maintained by the judiciary as well. So one of the cases where the Gujarat High Court has said that a professional firm cannot claim initial depreciation which was otherwise allowable only for a business case, and investment in partnership itself would not be amounting to business is what Punjab and Haryana High Court has mentioned in the citation cited. So all that would go to say business is discussed something differently or treated something differently in the legislature. Profession is discussed slightly differently. Both cannot be interchangeably used. Even the latest Finance Act 2020 made this particular concept endorsed in such a way to say when the bill was presented, section 115 BAC giving the option to an individual or HOA of either to go for a slab rate other than what is generally available at a concessional rate after removing all the benefits of exemptions and deduction. In that case, year after year we can opt in case of certain assessees. In certain type of assessees, year after year we cannot opt. We can opt only once, thereafter next year onwards one time we can get out. When that provision was introduced in subsection 5, in the bill stage, that particular provision went on to say nothing contained in this section shall apply unless option is exercised in the prescribed manner by a person having business income. So people started conveying a message that it applies only to a assessee having business income. So a person having professional income can conveniently decide to offer 1 year under new provision with a lesser rate of tax, other year with a different earlier year provision with basic limit and with all concessions with a different rate. But at the act stage, when bill became act, the word business income replaced by having income from business or profession. That means after finance bill became Finance Act, the condition of having business income or professional income have to exercise option once and thereafter only one time they could get out. is made applicable both for business and profession by changing the language employed in section 150 BAC subsection 5. So all along it was thought that eligible SSE having eligible business would only be applicable to business income. But when the section was introduced, certain adventurous SSEs went to the extent of opting for the section 44 AD even for their professional income, subject to other condition being satisfied. So what happened? Their professional income was, say for example, 35 lakhs. They offered 8%. But in that 35 lakhs, those days 194J, 10% was the TDS. For that 8%, even if you offer 30% slab, then 8% into 30% will be 2.4%. So 10% TDS, 2.4% was the actual tax payable. So 7.4% was 7.6% was sought as refund. Effectively, out of the TDS, some portion was sought refund, and it took 1.5 years to realize this. And within that 1.5 years, few people got the refund also. So to overcome this particular proposition, the subsection 6 was introduced in the statute. That subsection 6 was introduced in statute by Finance Act 2012 retrospectively from 1st of April 2011. And subsection 6 came up with a different understanding. What did it say? Notwithstanding anything contained in the foregoing provisions, provisions of this section shall not apply to 3 people. Provisions of this section shall not apply to, notwithstanding anything contained in the foregoing provisions, provisions of this section shall not apply to 3 people. Category 1, person carrying on profession referred to in section 44AA subsection 1. The language of the law is 44AA subsection 1. Section 44AA subsection 1 deals with specified professionals. Subsection 2 deals with all other professionals. So now subsection 6 of 44 AD says the section shall not apply to person carrying on profession referred to in subsection 1 of section 44 AA. Those 11 professionals are barred from applying this particular provision. Person earning income in the nature of brokerage or commission. Person carrying on agency business. So in case of brokerage and commission, probably it might have been felt that the percentage of earning would be more than 8%. They should not come under this category, therefore they are excluded. In case of agency business, the statistics might have revealed that the margin is very much less than 8%, therefore let that be excluded. But the language introduced in subsection 6 did not suggest that these sort of income shall be excluded from the application of 44 AD. Rather, the language of the law says people having this sort of income are not entitled to come under the provisions of 44 AD itself. So effectively, nothing mentioned in this section shall apply. The provisions of this section shall not apply to a person carrying on profession under 44 AA subsection 1, earning income in the nature of commission or brokerage, carrying on agency business. Moment the assessee's statement of total income has got any income in any one of these 3, then the provisions of 44 AD itself would not apply to that particular assessee, is what subsection 6 suggests. Instead of achieving what intended to be achieved, it started now giving different type of understanding to to this particular provision, which we will discuss when we are taking up the issues one after the other. Now this 44 AA talks about 11 professionals in the subsection 1 where it is specified. 44 AA subsection 2 says every person carrying on business or profession not being profession referred to in subsection 1. That means some more profession other than what is specified in 44 AA subsection 1 will also fall under profession. What 44 AD attempts to exclude by subsection 6 only to a person having profession covered under subsection 1. That means a person having profession under subsection 2 is not hit by subsection 6 of 44 AD, is how the language of the law suggests. That means one can say profession coming under subsection 2, although 44 AD starts with eligible business, such business, then still one can say by exclusion under subsection 6, what is contemplated is subsection 1 of 44AA, therefore subsection 2 can still fall in, is how the law suggests, which we will see when we are taking up the code for our discussion whether this is possible or otherwise. Now, when we see the income tax return and the codes of nature of business, this is all classified as profession, and this is the code number associated, and these cases one can opt 44 AD is how the schema of the income tax form and the income tax department rules provide for. That means these things will fall under subsection 2 of 44 AA, other professional other than 44 AA subsection 1 specified professional. These professionals can also avail the benefit of 44 AD. It's how the schema suggests, and one would be able to choose that they are in this profession and still availing the benefit of 44 AD. On a theoretical note, section should apply only for an eligible SC carrying on eligible business. That means all professions should exclude. But by reading subsection 6, which is barring only subsection 1 of 44 AA, one can take a view. Subsection 2 of 44 AA professions can also be eligible to bring under 44 AD, and the schema suggested also endorses this view. And subsection 2 says any deduction allowable under section 30 to 38 shall be deemed to have been given effect to, and no further reduction shall be allowed. There was a proviso below subsection 2 which went off, subsequently got deleted, and the written down value of the eligible business of an asset in the eligible business shall be calculated as if the depreciation has been actually allowed and deduction has been given for that. Now, the subsection 4 is a very important provision. Prior to assessment year 17-18, subsection 4 only mentioned that the provisions of chapter 17C dealing with advance tax shall not apply to an eligible SSE. That means if the SSE has got eligible business, for that eligible SSE, in so far as it relates to eligible income, eligible business, income therefrom, whatever tax payable, for that advance tax is not required. But assessment year 17-18 and thereafter, this particular subsection 4 got replaced by a different subsection 4, which has got a very large ramification in understanding the provision. What this new subsection 4 said, an eligible SSE first declares profit for any previous year in accordance with the provisions of 44 AD. That's the first year, let us say assessment year 17-18. In assessment year 17-18, that SSE first declares profit in accordance with 44 AD, 6 or 8% as the case may be. Then he declares profit in any one of the 5 subsequent assessment years, not in accordance with the provisions of subsection 1. That means 17-18 he has declared as per 44 AD. He is into 44 AD. Thereafter, 18, 19, 19, 20, 20, 21, 21, 22, 22, 23, any one of these year, he is not in this particular provision. He claims that his income is less than 8 or 6%. He is not offering income in accordance with the provisions of subsection 1. Then that year is working out. He shall not be eligible to claim the benefit of provisions of this section for 5 subsequent years. So for an example, 17-18 he has offered, 18-19 he walks out, claims that he is not able to offer 8 or 6% of the total turnover gross receipt. 18 he walks out, 19, 20, 21, 22, 23, 5 years he cannot walk in. So subsection 4 says first you should have been in 44 AD, thereafter any one of the 5 years, 1 year you walk out, that year plus 5 more years, that 5 more years you cannot walk in, is what the law says. Now year of walking out, anyway we will not walk in, year of walking out and 5 more years. Now 17-18 I have been in 44 AD, 5 consecutive years thereafter, 18, 19, 20, 21, 22, 5 consecutive years I am inside 44 AD. Thereafter 23 if you walk out, 24 I can walk in. The restriction is a block period of 6 years. After 6 years I am into 44 AD, 7th, 8th, 9th year, any year I can walk out, any year I can walk in. But in the first block of 6 years, 1 year I am inside. Thereafter, in the 5 years, if 1 year I walk out, that year plus 5 more years, I cannot opt 44 AD is what subsection 4 says. Now, subsection 5. Prior to 1718 up to assessment year 1617, the law similar to 44 AE, old 44 AF and old 44 AD when it was applicable for civil construction business said, if the assessee claims his income from this particular business is less than 8%, then he has to maintain books of account for this eligible business, get the books of account audited for this eligible business. Provisions of 44A subsection 2 and 44AB would apply for the case when he claims his income is less than the threshold prescribed. But subsection 5, from financial year 1617, assessment year 1718 made a change. Notwithstanding anything contained in the foregoing provisions of this section, an eligible assessee to whom the provisions of subsection 4 applies. That means a person who was already into 44 AD and in any one of the subsequent 1 years he comes out, that year of coming out plus 5 more years, that block of 6 years, to that particular year only, he will be liable for maintenance of books of account, get that books of account audited, provided in that year his income exceeds basic limit. So the person to whom subsection 4 applicable, to that particular eligible assessee only, maintenance of books of account, getting the books of account audited, applicable only if the income exceeds basic limit. So now what the law says, not that in every case wherever there is an eligible assessee having income from eligible business unable to offer 8 or 6%, he has to get the accounts audited. That was the position prior to assessment year 1718. From assessment year 1718, law underwent a change. What does it say? First, he should have been in 44 AD. Afterwards, in any one of the 5 consecutive years, he works out. Year of working out plus 5 more years. In that period, he has to necessarily maintain books of account, get the accounts audited, is what subsection 5 says. Subsection 6 we have discussed. Now we link this with 44AB clause E. 44AB clause E says, every assessee carrying on business, if the provisions of subsection 4 of 44 AD applicable, that means previously in 44 AD, 5 consecutive years, any 1 year he walks out, that particular assessee walks out plus 5 more years, that's 6 years. To only 44 AD subsection 4 applies only for that particular assessee. For him, in case his income exceeds maximum amount not chargeable to tax, then should get the accounts audited. Therefore, subsection 4, subsection 5, 44AB clause E all go to say, not that in every assessee, eligible assessee having eligible business income, once the income is less than 8 or 6%, he has to get the accounts audited. Previously, he must be in 44 AD. This year and next 5 years, any time, in that block of 6 years, 1 year he works out. The year of working out plus 5 years, that 6 years he has to maintain the accounts, get the accounts audited is what? Subsection 4, subsection 5 read with 44AB clause E communicate or convey to us. Keeping that in mind, we will pick up some controversies relating to section 44 AD one after the other. In the context of 44 AE or earlier 44 AF or prior to 2011 earlier 44 AD dealing with civil construction business, the law said, in case you are ready to offer this prescribed minimum or something more than this prescribed minimum, the turnover of this particular business shall be excluded from the total turnover of the assessee for the purpose of reckoning the limit of section 44 AB. So for deciding whether tax audit is applicable or not, those days prior to 11, civil construction business turnover shall be excluded, retail trade business shall be excluded, 44 AE business turnover shall be excluded, provided the assessee is ready to offer the threshold prescribed in the relevant section and the balance business turnover shall be aggregated, and if that exceeds the limit prescribed for the relevant purpose of section 44AB clause A, then audit would be required. Now, eligible SSC, eligible business concept introduced, similar to the line, the phrase available in 44AE prior to amendment in 44AD or in 44AF prior to its deletion. That similar language, if you are offering prescribed minimum or more as per this section, this particular turnover shall be excluded from the total turnover of the SSC for the purpose of section 44AB. That language is not found in section 44AD. Keeping that principle in mind, now we would just take up this particular case study. Mr. Q is engaged in retail trade and money lending business. The numbers are given. For money lending, a turnover 25 lakhs and net profit 5 lakh. So that is almost 20%. Retail trade 50 lakh is the turnover and 3 lakh is the net profit, 6%. Now assessee has a dilemma. Now he says this 5 lakh 20%, instead I'll go for this under 44AD. I'll offer 8% on this 25 lakh. For this 50 lakh 3%, assuming everything received in cash, again it is supposed to have been 6%, but I'm only receiving it only on 3%. So therefore, I'll maintain books of account for this alone and get it audited. Whether such a view of the SSC possible? More than one business, and one business under 44AD, one business not under 44AD but going under audit, whether that is possible. Having already said that if you come under 44AD, this business shall be excluded for the purpose of 44AB missing in the new law. Now we will have to see if the SSC has eligible business. Business may be one and the same, or business may be different. All eligible business need to be aggregated. In my view, it has to be aggregated. Having aggregated, if the turnover is falling below the limit, namely 1 to 2 crore or up to 2 crore, then we will have to see the turnover in total, profit in total, whether that is going to be more than the threshold prescribed. Not that for each business independently we need to see whether it is more than 8 or 6%. If in aggregate all eligible business put together, the turnover, all eligible business net profit put together, if the net profit to turnover ratio is falling above 8 or 6% depending on the collections, then it shall be sufficient compliance for the SSC to offer the entire net amount as it is, and he is in compliance of section 44AD. There is no need to audit this separately. But can the SSC say, in spite of having 20%, I will offer only 8% on the collections I've made? One can argue that to be so, but in my personal view, the law does not give a blanket permission to the SSC to offer something less when physically has earned something more. As long as there is no evidence available, nothing wrong in it. SSC can say, I want only this much. When the SSC has got evidence enough available to suggest that he has got income, it may not be really ideal for the SSC to offer only that much and still consider the balance as available income for various purpose. So therefore, aggregation of all eligible assessees, all eligible business in terms of turnover, aggregation of all eligible business profit, and thereafter comparing the net profit to total turnover, and if that number is going to be more than 8 or 6%, it shall be sufficient compliance. Independent business wise, it is not required to be seen. Now,
what you are saying, I think, is because 8% or 6% or such higher amount.
Yes, sir.
That is what the section says.
Yeah.
So in as per books of account, suppose you have capitalized more, or in your bank account or investment is more, then you have to offer a higher amount.
Obviously correct, Sarmaji. That is what I would like to convey. We will have the same thing for our case study subsequent slides also. We will discuss that in detail.
Right.
Fine. Now next we will pick up this question, namely Mr. Yes, non-resident for this year. Next year onwards he will become resident. Suddenly came in between, started a business and achieved a turnover of 90 lakh and would like to offer 8%. Can he be in a position to claim? Answer would be no, because the section says eligible SSC means an individual, HUF, a firm must be resident. So for a non-resident, if the status of the SSC is non-resident, the SSC may not be able to claim the benefit. Equally, if the status of the SSE is although resident, but AOP, the SSE will not be able to get the benefit because the eligible SSE would be only an individual HUF or a partnership firm other than LLP. Now it's a partnership firm, but it is doing agency business. Turnover is 80 lakh. Everything received through bank only. All the money is received through bank only. Net profit is 2.4 lakh, 3%. And it would like to claim further interest and remuneration to the partner at 1.8. Now whether provisions of 44AD would apply, because subsection 6 says in SSE carrying on agency business to him, the provisions of this section shall not apply. So therefore, if it's an agency business, we can conveniently say section 44AD is not there in statute for him. As if the statute does not contain 44AD as far as this SSE is concerned, we can forget 44AD. In that case, therefore, book results, whatever trading profit and loss account balance sheet he has got, that book results can be accepted as it is, and all the data need to be keyed in the return of income, and from this income, interest and remuneration subject to ceiling of 40B as mentioned in the deed, he can claim and he can do it. And since because income disclosed is less than 8 or 6%, audit would not apply in this case because for this SSE, section itself is not applicable. Now this is another case where this SSE is a proprietor engaged in trading of matchboxes. Turnover 90 lakh, everything received in cash. And he has got only 5%. From a real estate deal, he received on 10,000 rupees commission income. Now for this, it is not 8%, it is only 5% from this business activity. Now what this section, subsection 6 of section 44AD says, notwithstanding anything contained in the foregoing provisions, the provisions of this section shall not apply to a person earning income in the nature of commission or brokerage. Moment the SSE has income in the current year in the nature of commission or brokerage, the section itself does not apply to SSE. The language should have been to the extent of this commission or brokerage income alone, the section should not have been applicable. But unfortunately, the way subsection 6 is drafted, it goes to say that the section itself shall not apply to SSE moment he has got 10,000 rupees commission income. So if the SSE has got just 10,000 rupees commission income, 44AD section is not going to be applicable to that SSE at all. If the SSE says, I've got income from business, but the income net profit is less than 8 or 6%, but I've got commission income for 10,000 or 20,000 from a particular deal. As because I've got commission income in that particular year, for that particular year, section 44AD is not at all applicable to me. If that view is taken, the section speaks so. The section says, notwithstanding anything contained in the foregoing provisions, the provisions of this section shall not apply to a person earning income in the nature of commission or brokerage. Now, here in the third case, carrying on agency business is mentioned. Whereas here, the commission or brokerage need not be a level of carrying on as a business activity. Even an isolated transaction leading to receipt of a commission may be sufficient enough to trigger subsection 6 clause 2, because it says person earning income in the nature of commission or brokerage. That earning income in the nature of commission or brokerage could even be accessible under other sources. Still, that is sufficient to say he has earned income in the nature of commission or brokerage in this year. Therefore, the provisions of section 44AD does not apply to SSE. Therefore, even if the income declared is less than 8 or 6% as the case may be, provisions of 44AD does not apply, subsection 4 does not apply, subsection 5 does not apply. Consequently, subsection 44AB clause E does not apply to the SE. Book results can be reported in the return of income and the return can be filed. Now, this is another scenario where Mrs. P and Company firm into manufacturing of matchboxes. First year, this firm has earned 80 lakh rupees turnover and 5% profit. Everything received in cash, therefore 8% is the requirement. Now, whether this particular SSE claims that he has got only 5% income in the first year, he is required to at least offer 8%, failing which whether he has to undergo audit provision is something which we will have to examine. For this, subsection 4, let us go. He must have declared profit already under 44AD. Current year he must walk out. current year plus 5 more years, he should maintain books of account, get the accounts audited. That's the condition of subsection 4 from assessment year 1718. Had it been prior to 1718, this assessee would be liable to maintain the books of account, get the accounts audited. From assessment year 1718, this assessee is not required to audit under section 44AB clause C read with 44AD merely because his income disclosed is less than 8 or 6%, because he is not satisfying the conditions of subsection 4 of section 44AD. Being a first year, if the income disclosed is less than 8 or 6%, the book results can be uploaded in the return of income and return could be filed without doing any audit. This is what subsection 4, subsection 5 and clause E of 44AB together communicate to us. Now, this partnership firm is engaged in the business of trading in rice. Now, 1617 assessment year, 80 lakh is the gross receipt turnover. Income earned is only 5% of it. Up to assessment year 1617, 44AD said, if it's an eligible business, you are not able to offer 8%, therefore get the accounts audited. Therefore, the assessee audited under 44AD. Yes, audited the accounts, filed the return along with audit report. 1718, change took place, previously not under 44AD. Still, since the income is less than 8%, voluntarily he audited, he got the accounts audited, filed along with 44AB report. 1890, similar scenario. 1920, similar scenario. Now, he would like to know whether he has to continue this or he can take shelter under subsection 4. In the all previous year, although section for these 3 years do not require him, section does not require him under subsection 4 to get the accounts audited, voluntarily he got the accounts audited. Nevertheless, current year will examine subsection 4. Previously, from assessment year 1718, previously none of the years he was under 44AD. Since in all the previous 3 years after the amendment he was not under 44AD, in the current year he is not getting hit by subsection 4. So he is jolly well offer 5% of his total turnover as his income without carrying out audit. With book results, trading profit and loss account, balance sheet, he can key in the return and furnish the return of income without audit report. Now, this is a concern which has got a lodging business. This person has got a lodging business and the last 4 years he has offered under 44AD. Now, current year, his income has gone down. It is only 3.5 lakh, which is 5% of total turnover, everything received in cash. He ought to have reported 8% if at all he still would like to come under 44AD. Now, what does it say? He is previously under 44AD. Current year he walks out. He is unable to offer 8%. So when he current yearly walks out, we have to now see 44AD subsection 4 applies. Subsection 4 applies. Now let us go to subsection 5. Person to whom subsection 4 applies, it is applicable. But however, in order to trigger audit, this assessee must have income exceeding basic limit. This assessee has got 5% of his turnover as his income, but after claiming chapter 6A part B, not part C, part B, section 80C related benefit, he has no other income, therefore his income falls below basic limit. So even though he comes under section 4 of 44AD, as per subsection 5, subsection 4 applies, but his total income does not exceed basic limit, and therefore subsection 5 allows him not to invoke 44AB. Therefore, even in this case also, although previously 4 years he was under 44AD, this year he walks out. Nevertheless, in this year, audit is not warranted in this case.
Light laga.
Sharma ji, you have anything to say?
No, sorry.
Okay, fine. Now we will pick up this particular example. This partnership firm engaged in cloth business gives the information. First year, when the amendment took place, assessment year 1718, it has gone into 44AD. By applying 8.5%, availed the benefit of 44AD. Next year, 1819, again 44AD. it has availed the benefit of 4480. 1920, the turnover has crossed 200 lakhs. Therefore, the assessee could not come under 44AD. Therefore, it has come under 44AB class A. Now, turnover has come down. Whether the assessee can again avail the benefit of 44AD, or alternatively, he has to go under the normal provision by applying subsection 5, etc. Now, subsection 4 says already under 44AD, any one of the 5 years he opts out, then he has to get in. That year of opting out in 5 years, he cannot get in. Now, in the year of 2019-20 assessment year, he has not opted out. Law does not allow him to be in because of turnover criteria. So, therefore, one can say this is not a case where the assessee has opted out. Section does not allow him to be in. Therefore, it is not a voluntary opting out. Therefore, next year he can very well get in. So, in my personal view, this year you would like to offer under 44 AD. Nothing bars the assessee to do it, because in this year he has not opted out. It is because of the fact that turnover crossed 200 lakhs, he has come under 44 AB. Therefore, in this year he can conveniently again, if at all he would like to, he can again conveniently get in and take the benefit of 44 AD by offering the percentage, whatever the results, without maintaining books of account, without getting the accounts audited. Now, slightly will change the facts. This year, first year same, he has opted under 44 AD. Second year, the turnover was less than 200 lakhs, but voluntarily opted out because his income was less than 8 or 6%, as the case may be. And thereafter, turnover went up beyond 200 lakh. Therefore, he has gone under 44 AB. Now again it has come down. Whether he would like to come under 44 AD. Since in the assessment year 18-19 he has opted out voluntarily, disqualification gets attracted. From the year of walking out, 18-19, 18-19, 19, 20, 19, 20, 21, 22, 23, 5 more years from assessment year 18-19, he cannot walk in. For those 5 years, once the income exceeds basic limit, he has to necessarily get the accounts audited by virtue of subsection 4 and subsection 5 of section 44 AD. Now, this is a firm trading in soap powder and opted for 44 AD last 3 years. Now, this year turnover is 80 lakh. All received in cash and 8% they have to offer. 80 lakh into 8%, 6.4 lakh. Interest and remuneration to the partner is quantified, before which it is 8 lakh, after that it is 4 lakh. Now, what to do with this? Whether before claiming interest we have to see this, or after claiming this we have to see this. This was the controversy for some time. Subsection 2 says any deduction allowable under section 30 to 38 shall be deemed to have been already given effect to. Now, interest and remuneration comes under 40 small b. One school of thought which assessee would like to canvass would be interest and remuneration to partner comes only under section 40 small b. It does not come under section 30 to 38. Therefore, why not we say all the deduction under 30 to 38 only was given effect to already, therefore fresh has to be given. Previously, subsection 2 had a proviso to say in case of partnership firm, after quantifying the income under subsection 1, interest and remuneration to partner to the extent permissible under section 40b can be further given effect to. That proviso got deleted. But some people used to say, even without proviso also, why not we make a claim, saying that the enabling provision or restricting provision here is only 30 to 38, therefore why not we make a claim, is something one school of thought emerges. On a closer scrutiny of the provisions, one would be able to say that interest is claimed as a deduction only by virtue of section 36(1)(3). Remuneration is claimed as a deduction only by virtue of the provisions of section 37. If interest is paid to a third party, the enabling provision for claiming interest is 36(1)(3). We have to satisfy the conditions of 36(1)(3) to claim this particular interest. If a salary is paid to a third party, in order to claim that as a revenue deduction, conditions of 37 need to be satisfied. Only then the deduction shall be allowed. Instead of paying this to a third party, if the payment is sought to be made to, or a claim towards deduction on these lines to be made to a partner concerned, then in addition to satisfying the conditions of section 36(1)(3) and 37, the conditions of 40 small b to be additionally satisfied by assessee. In other words, 40 small b is only a disabling provision, is not an enabling provision. 40 small b is a disabling provision. 36(1)(3) and 37 are the enabling provisions for claiming the deduction of interest and remuneration payable. So since 36(1)(3) and 37 already is considered as given effect to, fresh claim is not possible. So in Munjal Sales Corporation case, Honorable Supreme Court has made this observation very clearly to say 40 small b is only a disabling provision. It is not an enabling provision. The enabling provision for claiming of interest would be section 36(1)(3). For claiming of remuneration, section 37 is what Honorable Supreme Court has endorsed in Munjal Sales Corporation case, which need to be taken note of. Now, the same case, interest, before claiming interest and remuneration, the income is 1.3 lakh. After claiming interest and remuneration, it has become minus 2 lakh, 0.2 lakh. Now, what would be the scenario? Now, subsection 5 says previously you were under 44 AD. Subsection 4 says previously under 44 AD. Now you walk out this year and 5 more years. As per subsection 5, get the accounts audited provided your income exceeded the basic limit, is what the law says. Now, for an individual HUF, we have no difficulty. If the income exceeds basic limit, let us do audit. If at all income does not exceed basic limit, let us not do audit. But for a partnership firm, what to do? For a partnership firm, one school of thought says the basic limit is not at all provided in the Finance Act. Therefore, the clause of not exceeding basic limit or not exceeding maximum amount not chargeable to, that particular provision itself is not applicable. If that being the case, if you are not offering 8 or 6%, mandatorily get the accounts audited. Another school of thought, when the income, the language employed is maximum amount not chargeable to tax, and the Finance Act does not provide for any basic limit, let us presume 0 as basic limit. Anything below basic limit, anything below 0, it is as good as below basic limit. Therefore, audit is not warranted. The first school of thought is absorbed or taken as correct. All the cases where there is less than 8 or 6%, whether or not profit, whether or not incurring losses, necessarily audit is warranted. If the second school of thought is admitted, profit returns exceeding 6 or 8% fine, less than 6 or 8% audit warranted. Loss returns can be said to be less than basic limit, therefore audit not warranted. Although theoretically, on a proper interpretation of law, I would subscribe to the first view. The schema of the income tax department, the return columns, forms, etc., would go to suggest that if there is a loss return for which we are not attaching any audit report, although income declared is less than 8 or 6% because it is loss, it does not throw open any surprises by form of 139 notices, etc. These loss returns are getting processed and refunds, if any, shall get credited. So therefore, it appears that the schema of the income tax department subscribe to the second view, that if the income for a partnership firm as 0 treated as basic limit and the income disclosed is less than 0, it could be said as less than basic limit and therefore audit is not warranted. So in practical note, it so appears. So now there are few other issues, namely claiming of partners remuneration and interest against this, and interest and remuneration alone we will be picking up under 44 AD, or how to consider the quantification for this purpose and all other related provision, all that common provisions dealing not only with 44 AD, also under 44 ADA, also under 44 AE. Therefore, we will these sort of controversies alone, we will defer it. After discussing 44 ADA and 44 AE, we'll pick up this so that uniformity or a comparison could be taken up for our discussion. Samaji, I would like to stop at this stage for a minute or a couple of minutes to pick up some questions so that if at all anything up to this, whatever we have discussed, we can pick up for our discussion.
Yeah, that is better. Are there questions in the chat box? 1 second. Dilip bhai?
I'm just seeing it. 1 minute. Yeah, one Mr.
Praveen Rathi.
Praveen Rathi. Yeah, he has given a view that 44AD starts with a non-obstant clause regarding inapplicability of the provisions of section 28 to 43C. Therefore, provisions regarding the disallowance of income tax under 40A2 are not applicable. Therefore, if the profit worked out under 44AD at the more than 8% is after deduction of income tax, whether it is correct. Further, higher profit referred, I think this question which we have to wait for is going to take up in the next slide. It is there. Next is whether deduction under section 80JJ is allowable. Yes, sir.
This question I'll take up. That
Okay.
80JJ, this aspect, whether income tax and all that, we will pick up along with this particular 40A 1A, 40A 1 or 40A 2, etc.
Okay.
We'll line it along with this
yes.
artificial disallowances because of the statutory provisions. That will line up along with that, sir.
Yes,
This question will take up 80JJA. Eligible SSE carrying on eligible business is what the section says. Eligible business means business other than plying of goods carriages, and for eligible SSE means the SSE being individual, HUF, partnership firm, all being resident other than LLP, and not having any income, not claiming any income under chapter 6A part C. Part C talks about 80 HSE onwards till 80U. Therefore, this 80 JJAA is also covered under part C. If the assessee wants to claim 80 JJAA benefit against the presumptive income covered under 44AD, moment he says he would claim, he will become an ineligible assessee. In that case, for that assessee, it will be difficult to say I will go under 44AD and still claim 80 JJAA. That may not be appearing to be possible because of the express language of definition of eligible assessee.
Yeah, next question is
Can speculation business, can it be said to be the business referred to in 44AD?
Yeah, answer would be yes. We have a separate slide available at the end after this common points are discussed. Now itself we can say yes, but we'll elaborate it when we are coming to that particular slide.
Yes. Okay. The next question is section 145A adjustment and section 43CA adjustment, whether income is required to be offered at 8%.
Now, again, this is what now we will presume this way. The assessee on the gross receipt would like to offer 8%, then these adjustments are set to be taken note of or taken credit. After all these adjustments, we are going to take up this. But to decide gross receipt, certain sections will have an implication. 43CA for a moment, or the express provision of section 145A. When this ICDS came up, and when the FAQ on ICDS came up, there is a specific question to say the presumptive income cases, whether these adjustments are said to be already given effect to or otherwise. In that case, the FAQ on the ICDS went on to say, for determining the gross receipt or determining the total turnover or sales, if you have to import 43CA, you have to import 145A, give effect to that and ascertain the gross receipt or ascertain that turnover or sales value. On that, apply 8%, 6% as the case may be. For the purpose of determining total sales, gross receipt, turnover, provisions of 43CA, 145A, ICDS would apply. But this entire gap, let us say 60 lakh rupees is the transaction value. By applying 43CA, the transaction gets escalated to 80 lakh. The transaction value gets replaced by 80 lakh. For applying 8% or 6%, instead of 60 lakh, we should consider 80 lakh. But however, that entire 20 lakh need not be added to income. Even in the 20 lakh rupees, if you offer 8 or 6%, enough. That is amounting to meeting the requirement of section 44AD. So for determining the turnover, gross receipt, sales, impact of section 145A, 43CA, ICDS need to be considered. The entire artificial impact need not be counted as income. Even in that impact, if you offer 8 or 6% as the case may be, that would be amounting to compliance of provisions of 44AD.
Next question is regarding 44AA, specified profession. What do you mean by profession of accountancy? Does it mean accounting work? Tax consultancy is accounting?
This question will defer it for 44 ADA and combine along with that. So that will be easy for us to appreciate.
Fine. And now I just request you, can you go to slide number 18?
You will have to tell me the number, sir, because I'm not very sure where it is. I'll just go back.
Okay, this is regarding that applicability of this 44 AD and AB. What you said that in the first year, if you are not in 44 AD, then you can get the benefit of not offering the income.
Yes, sir.
Right, no?
You can also say in which slide it is so that it will be beneficial to everybody.
Just a minute. Just trying to find out.
I'll just go back.
Just the slide in which you mentioned for that first year of your business. Yes. If it was the first year of your business, that slide.
I'll pick up that particular example.
Yeah. Unfortunately, the numbers are not there on the slide.
Yeah. No, that's easy, sir. It's not a big.
Okay.
This is the one, the first year.
Yeah, first year.
Yeah. Yes, Dilipji.
Yeah. So, first year, if you are having a turnover of 80 lakhs, the profit earned is after interest and so here your view is that 44 AD is not applicable.
Yes.
And you need not get your accounts audited for 44 AB also.
Because turnover
is less than 80 lakhs.
We will go with the length.
Yes.
Dilipji, I would like to add one point. If 44 AD subsection 4 does not apply, 44 AD subsection 5 also does not apply. Once 44 AD subsection 5 does not apply, 44 AB class E would not apply.
Okay.
In that case, the option would be only to examine the applicability of tax audit only with reference to class A of 44 AB.
Okay.
Class A of 44 AB requires the assessee to have a turnover exceeding 1 crore to trigger the provision.
That's right.
Now it is only 80 lakh. Therefore, in the first year, it is not warranted.
Okay, fine. Any other members having a view? There is a show of hand by Mr.
Show of hand I saw in the middle.
Yeah. And show of hand is Mr. Yeah. I'll just see whether it's a question by him or what. There is a show of hand, but I do not know how to mute him. Atul Doshi is there, but I do not know how to mute him. So if you can write your query, Mr. Atul. I think we'll go ahead and we'll take up his query next when he writes it down.
Next break.
Yeah. One second. I have allowed Mr. Atul to speak.
Yeah. Please do that.
You can now unmute and speak.
Yeah. This was regarding agency business. Okay, you said 44, it is rightly said it is 44 AD is not applicable. But at the time of processing, the CPC doesn't allow that, and they give the notice, defective notice under section 139. So what can be that recourse for that?
Now, agency business, if unfortunately this one aspect is not properly captured in this screen. I also agree with this. The only option is to give a rectification request to come, and matter one should get referred to the AO. At the CPC level, machine would not read this. Matter has to, we have to make a repetitive request for request of 154, and the matter will come back to AO. Only before AO it will get settled.
Hello. Ramnath, of course, I asked you that question or such higher amount. And of course, you said if the higher amount is there, many people are arguing because the section says as claimed by the assessee. If the assessee does not claim higher amount, then you did not offer. Yes, I don't subscribe to that view. What is your view?
I will take up that along with this bullet point when we are having the common aspect 60 and 69 series.
Right.
Along with that, we will pick up that and we will see how the law will get unfolded in those cases when such arguments are placed.
Right. And this 145, I think question was whether on taxes you have to pay 8%.
Okay. That was with reference to to the extent of taxes, GST for example, for our case, Definitely, in my personal view, going by the guidance note on 44 AB, whatever our institute has guided, these revenue collections are only having element of collection and remittance. These collections do not have any profit element. When that profit element is missing, on which expecting assessee to pay 8% as income and pay tax thereon is not appropriate. Therefore, we can exclude the tax component of it, and only the collection towards assessee's account as sales, gross receipt, turnover alone need to be factored, and is what my personal view.
Okay. Ashok Mehta. Ashok, you are here?
Yes,
Hello.
sir.
No, you have any issue? You have also dealt with this subject.
No, I think I agree with sir's view that
in any other issues also discussed so far. Any other exam?
No, I agree with him. He's
right.
Correct. Yeah.
Okay, right. Now then you can proceed, sir. Any other question? Otherwise, you can, sir, can proceed.
Yeah, I think we can proceed. No question. Yeah. Please go ahead. Please go ahead. Yeah.
Oh, thank you. We will move on to the other section, namely 44 ADA. 44 ADA will just quickly run through the barrack provision. It again almost similar to, notwithstanding anything content that language, in case of an assessee being a resident of India. It talks with resident of India. And similar to 44 AD, here we do not have any status related restrictions. Engaged in the profession referred to in subsection 1. Total gross receipts do not exceed 50 lakh in a previous year, equivalent to 50% of the gross receipt, or some higher than the aforesaid sum claimed to have been earned. All that is fine, we have already been aware of it. But in a personal note, this 50% on gross receipt for a case where income does not exceed 50 lakh is something which by and large would not make many of the cases to avail this benefit, and forcibly making the assessee to get the accounts audited is what, on a personal note, we could see from many of the cases. And 44AA subsection 1 is what is discussed there. That means whatever coming under 44AA subsection 2 profession would not be in a position to avail the benefit of 44ADA. 44ADA would apply only for subsection 1 of section 44AA, meaning those 11 professionals mentioned in 44AA subsection 1 alone would be in a position to come. All other professionals, although covered under subsection 2, would not be in a position to come under 44ADA. So a professional not considered in the 11 professionals specified under 44AA subsection 1, but coming under subsection 2 of section 44AA would not be in a position to take the benefit of 44ADA. Then whether he would be able to take the benefit of 44AD, going by literal language, 44AD would apply only to a business. But by subsection 6, it says assessee engaged in profession covered under 44AA subsection 1. That means it suggests subsection 2 is not barred from availing the benefit of 44AD, and the schema also so permits. What are the 11 professionals contemplated for the purpose of this particular discussion? Legal, medical, engineering, architectural profession, profession of accountancy. About this we have the query, we will discuss later. Technical consultancy and interior decoration. These are all the professions mentioned in the Bar Act itself. Such other profession notified by the board, we have authorized a representative, film artist, company secretary, information technology. The sports personnel, umpires, players, etc. These sports personals are not considered as professionals specified for the purpose of 44AA subsection 1. If we recall this along with section 194J subsection 1, it says fees for professional services for which 10% TDS is necessary, except for this COVID period which has become 7.5%. Now there the language says the fees for professional services, there the professional services mentioned for the purpose of 44AA subsection 1, notified for the purpose of subsection 1 of 44AA, and notified for the purpose of this section That means 194J. Now, sports personals are notified for the limited purpose of 194J to deduct tax at source at 10%. But they are not notified professionals coming under 44AA subsection 1. Therefore, they may not be in a position to take the advantage of 44ADA. They may come under subsection 2. Therefore, they may even get the benefit of 44AD. But technically, 44ADA would not apply to them because they have been considered as professional for the limited purpose of 194J only. They are not considered as professional for the purpose of section 44AA subsection 1. And subsection 2 and 3 similar to what we had for subsection 44AD. And where a person claims his actual income is less than 50% mentioned and his total income exceeds maximum amount not chargeable to tax, he has to maintain books of account, get the accounts audited. Similar to pre-amended 44AD, 44EAF, 44AE. Now, this section applies to resident SSE. A non-resident SSE cannot get the benefit of 44AD. Now, status-wise individual, HUF, partnership, LLP can get benefit, no doubt about it. Company, can they get the benefit? Obviously, whether if the professional regulated bodies restrict certain entities to practice such profession, that is not possible to be brought in. If no such restrictions are there, even other type of assessees can avail the benefit of 44ADA. It doesn't seem to be, there doesn't seem to be any restriction with reference to this particular scenario. So 44AA subsection 1 only gets attracted here. 44AA subsection 2 does not get attracted. Now, the income tax return form says these are the professionals coming under 44ADA subsection 1. That 44ADA meaning 44AA subsection 1 in respect of medical profession. General hospital, special hospital, nursing home, diagnostic center, pathological laboratories. But these are the cases considered to be not coming under 44AA subsection 2, but considered to be subsection, coming under subsection 2, not under subsection 1. Therefore, they can even come under 44AD. Independent blood banks, medical transcription, ambulance service, suppliers, agencies, medical stores, they can come under 44AD. But these cases will fall under 44ADA is what the form suggests. And all these cases will fall under 44ADA, all considered to be medical profession prescribed under 44AA subsection 1. Unani, homeopathy, Ayurveda, medical education, medical research, any other alternative medicine, etc. Now, this is the case which we had to consider. Profession. What do we mean by profession of accountancy? Chartered accountancy, cost accountancy. Something other than that also can be considered. Whether that does mean there is no need to have a professional qualification. Without professional qualification, if a person is practicing, whether that could also be taken. On a theoretical note, very technically, if we interpret, section 2, clause 36 says profession includes vocation. So if a person is practicing as vocation, for the purpose of income tax, he could be considered to be in that profession and he can come under 44ADA. Nothing says that only a person holding certificate of practice in the with the Institute of Chartered Accountants of India or companies or cost accountant of India only should come, because company secretary separately prescribed. Profession of accountancy, chartered accountant and cost accountant would come. But by close reading of section 2 clause 36, one can say profession includes vocation. Therefore, accountancy profession, people who are practicing as vocation can also call it to be profession. Therefore, 44AA subsection 1 would apply to them. If they would like to come under 44ADA by offering 50% of their gross receipt, fine. Failing which, they need to go under audit requirements. So accounting, bookkeeping, auditing, all considered as profession coming under 44ADA. Tax consultancy comes under 44ADA. This fashion designing, I am unable to link this with any of the 11 professionals notified by the board. There is only one area one can think about, this film artist. Film artist has got so many subclasses: cameraman, director, music director. Their cameraman is considered, dress designer is considered. Can a person coming under cameraman there will come under this photography, or that person who is designing the dress for a film industry alone can come under this, or generally every fashion designing professional, every photography professional can come under this? It is not very clear, because that 11 professionals should be linked. Quite strangely, these two cases, though technically for the we are unable to generalize all these cases to this 11 professional, still the rule and the scheme of the income tax calls this as profession covered under 44 ADA, and they can avail the benefit of 44 ADA. And under cultural and sports activities, individual artist, excluding author, literary activities, other cultural activities considered as 44 ADA, coming under 44 ADA. Here again, that 11 professional contemplated under 44 ADA or 44 AA subsection 1. I am unable to link these three cases, or that for fashion designing and photography, to any of the 11 professional, but still the schema of the income tax department suggests that these can also come under 44 ADA, and they can bring their profession as eligible under 44 ADA, offer 50% without maintaining books of account, getting it audited, they can get away. In respect of computer and related, because one of the specified profession is information technology. For information technology, all these things are considered as 44 ADA profession, but these are considered as not profession. That means not specified profession under information technology category, and therefore it has to come under other profession or business. No much difference, because we go under 44 AD by applying 44 AA subsection 2, computer training and educational institutes, other computer related exercise, cybercaf, they can go under 44 AD. Whereas these cases, BPO service, data processing, software consultancy, other IT enabled services, they can go under 44 ADA. So that even a limited company having data processing, having less than 50 lakh turnover and would like to take under 44 AD offering 50%, technically whether they can go, answer would be yes, but whether they can offer just 50 though their income is more than 50, again as Sharmaji said, whether that would be a good defense, we'll take up when we are discussing section 68-69 series. All deduction shall be deemed to be claimed allowed in full. For a partner, interest and remuneration can be said to be already allowed. No further claim is possible, because subsection 2 does not have any separate exception for it. Profit on sale of asset, because subsection 3 says the depreciation shall be deemed to be given effect to in full. So that means if for some reason one block is becoming negative because of sale of asset of that year, that block becoming negative resulting in capital gains, and that capital gains becoming income, one would not be able to say that 50% income already offered includes this short-term capital gain as well. What is sought to be replaced is only what is mentioned in section 28 to 43C. What is coming under chapter 4E, that is capital gains, that income is not replaced by the presumptive income. Therefore, in case where block ceases to exist, as a result of which there is a capital gain revenue, and that capital gain has to be independently offered in addition to the presumptive income, and this rule will apply across the board for 44 AD, 44 ADA, 44 AE, and it is not only restricted to 44 ADA. And in a case where the income claimed to have been earned is less than that 50%, books have to be maintained, audit is necessary, and however, the income must exceed basic limit. For an individual HOF, 2.5 lakh sufficient. For firm, LLP, etc., basic limit. The second view, what we discussed already, 0 is considered as basic limit. When loss comes, it is less than basic limit. Therefore, without audit, return could be filed, and without any difficulty, return is also getting processed in real time. Now we will pick up this one case study alone for the purpose of appreciating this particular provision. Mr. Doctor or is a practitioner of medicine, having clinic as well as medical shop. His professional gross receipts 40 lakh. His sales from the medical shop is 70 lakh. Now, how he has to handle this year's case with reference to presumptive provision. Now, fees from gross fees from the profession is 40 lakh. As per section 44AB clause A. Now 44AD as such would not apply to this particular person, because as per subsection 6, a person carrying on profession referred to in 44AA subsection 1, nothing mentioned in this section will apply. For him, we will have to forget that 44AD is there in statute. As if 44AD is not there in statute, we will have to examine this position. So now 44AD for the time being we will take away. As if 44AD is not there, we will take up. Now, first we will see profession 40 lakh, sales from medical shop 70 lakh. Now in this scenario, 44AB independent of 44AD, 44ADA will examine. 44AB class B, carrying on profession, if his gross receipt in profession exceeds 50 lakh rupees, should get the accounts audited. Here professional gross receipt is 40 lakh. So class B of 44AB would not apply to him. If every SSC, every person carrying on business, if his business total, if his total turnover, sales, gross receipt in business does not exceed, in business exceed or exceeds 1 crore, only need to get the accounts audited. That means in business it is not exceeding 1 crore. Therefore class A would not apply. So class A would not apply, class B would not apply as per 44AB. Now what we need to see, class D, class E as the case may be. For class C, class D, where a person coming under 44ADA and he is not able to offer 50% as his income, then audit would be warranted to the extent of his profession. Now this 40 lakh, he says, I will offer 20 lakh rupees as income from this particular activity. That means for him, he is ready to offer 50% of this. Therefore, he will go under 44ADA. Done. Now, having said 44AD, whether he has to offer 8% or 6%, otherwise he has to get the accounts audited. For a moment, let us say it's a first year of his practice. Previously, he was not under 44AD. Now, in this case, being a first year, irrespective of 8%, 6%, 16%, 30% from his medical shop business, he has to offer book results. Technically, this assessee has got income covered under 44AA. Therefore, 44AD is not applicable at all to him. So, he has to maintain books subject to 44AA. Whatever book results from the medical shop business, he has to offer. For 44ADA from professional gross asset, if he offers 50%, enough. For business, as per book results, he has to offer. Point 1. Now, whether for the purpose of 44AB, he has to aggregate these two and say it is more than 100 lakh, therefore audit is warranted. Answer is no, because the language here is R. If business gross receipts, turnover, etc. exceed 100 lakhs, audit is necessary. Or professional gross receipts exceed 50 lakh, audit is necessary. It is not and. Therefore, if both of them are falling below the threshold, for that reason, aggregation is not required. Having excluded the applicability of 44AB class A, class B, having analyzed that 44AB class D applicable for this, provided he is ready to offer less than 50%, and if he is ready to offer more than 50%, class D would not apply. And class E would not apply because subsection 6 says for this assessee, there is no question of applicability of 44AD at all. Therefore, he can go with book results. Now, having said he would offer 50% of this, this assessee comes and says, I do not want to maintain books for my medical shop business. Still, I would like to go under 44AD for medical shop and I'll offer 10%. I do not want to maintain books, inventorize, etc. Whether that benefit is possible. Subsection 6 says nothing mentioned in this section shall apply to a person having profession covered under 44AA subsection 1. But the form says an assessee having professional income under 44AA, offering under 44ADA for his other activity would like to have 44 AD, nothing prohibits him. That's how the form says. Although Act prohibits the applicability of 44 AD, the form conveniently allows the SSE to get the benefit in this case. So therefore, the form says even in that case, the person can avail the benefit of 44 AD. So therefore, this SSE, if we would like to take 20 lakh out of this and 10% out of this, would like to come under presumptive provision of 44 ADA for this case, and would like to come under the presumptive provision of 44 AD for this case, the scheme of the income tax department permits it, and the SSE can avail the benefit and he can file the return accordingly. Alternatively, would like to offer 20 lakh on this and would like to go with book results, nothing wrong in it. Would like to offer less than 20 lakhs here, get the accounts audited only for this and go with book results for this, nothing wrong in it. All that depending on the facts of the case, SSE can explore and get it done. And considering the remaining time available, can we quickly take up 44 AE also and then take up questions, sir? Dilip ji, Sharma ji?
Yeah. Yes. 44 AE will go through very fast, because
so
yes.
Yeah, sure. Almost this is a very simple provision, nothing much when we start comparing the other one. Here, same language, owns not more than 10 goods at any time is the criteria, and SSE means possession of the goods and either taken as hire purchase, etc. This is there one as an exception to this scenario. And heavy goods vehicle, where 1000 rupees per ton per vehicle, other than that 7500 rupees per month per vehicle. But in the language some difficulty is there. This is what we have seen. All the deduction of 30 to 38 shall be deemed to be allowed in full. Here the proviso retained in 44 AE. Originally this proviso was there in 44 AF. Provision was there in 44 AD. AD deleted. ADA not introduced. AE still remains. That means in case of plying of goods carriages, after quantifying the presumptive income, the partnership firm is entitled to the interest and remuneration subject to the ceiling prescribed in 40 small b. Returned on value to be computed as if the depreciation is allowed in full. Where the person claims the income is lower, then he has to maintain the accounts, get the accounts audited. Where the person offers this minimum income, this will not be counted as the total for the purpose of 44 AA, 44 AB, when he has other business income or business total turnover, gross receipt as the case may be. And this is one small issue which need to be taken. Goods carriage, gross vehicle weight, unladen weight, we will have to take up from the Motor Vehicle Act. Heavy goods vehicle alone, they have divided. If it have not defined, could have been better off. It has been defined in the law to say gross vehicle weight exceeds 12,000 kilogram, 12 ton vehicle. Now Income Tax Act says gross vehicle, heavy goods vehicle means goods carriage, gross vehicle weight exceeds 12,000 kilogram. But in the Motor Vehicle Act, gross vehicle weight, goods carriage, gross vehicle weight, or tractor or road roller unladen weight of which. That means motor vehicle, the unladen weight applies only to a tractor or road roller. For a goods carriage, gross vehicle weight only applies. But this portion is deleted, but the word unladen weight continues in the primary section. Either gross vehicle weight or unladen weight as the case may be. That means it gives a suggestion when the unladen weight before loading the goods is something less. Can the SSE take that unloaded weight and apply 1,000 rupees per ton is what the meaning it suggests because of this language. Because goods carriage is so defined to say motor vehicle constructed or adapted for goods carriage is what the language. Gross vehicle weight certified by the authority plus vehicle weight. Unladen weight is vehicle or a trailer which is not loading any goods. The goods are, the vehicle is as such, but using for some other purpose like a rig, borewell or a trailer, etc. But this is whether those vehicles can come under 44 AD is a 44 AE is a controversy. Now, our Motor Vehicle Association made a claim whether unladen weight before considering the weight which can be loaded itself is sufficient to offer or we have to do it, for which a clarification came to say goods carriages you have to take vehicle weight, whereas in respect of tractor, road roller you have to take unladen weight as per that. Whether tractor, road roller or other vehicle, whether that can come under a goods carriage itself is a question mark, but a clarification has come in the last year whereby the unladen weight concept would not apply to a vehicle which has got a capacity to load goods. In that case, you have to take the goods vehicle weight plus the maximum weight which can be loaded as certified by the authority. Now quickly, this section does not restrict to residential status or the status of the C. Even a company can get a benefit. AOP, BOI, company can get a benefit if it's possible. Now one has to see 44 AE as well as 115 JB, because 115 JB applies to a company. Now in this case, a company which has got 3 lorries, not being heavy goods carriages. Now what would happen? 44 AE would apply for 7,500 per month per vehicle and 12 months and 3 vehicle. Regular income 2.7 lakh. Tax thereon 84,000. Under normal provision, because being a company, you will maintain books, get the accounts audited for company law. From the net profit as per P&L account, you will do adjustments. Then what you get is the regular income and tax thereon. Under 115 JB, regular books are maintained, 115 JB applies. Now what to do? Now for a moment, if you take away 115 JB, normal provision comes under 28 to 43C. Notwithstanding anything mentioned in 28 to 43C, 44 AE would apply. Now 115 JB says notwithstanding anything contained in any other provisions of this act. That means notwithstanding anything maintained in any other provisions of this act, 115 JB will override this. Now how to compare this? For a moment we'll take this away, take these two. Now normal provision 220, regular provision more. The assessee claims this income is, he has not earned this much income. Anyway, he has got the accounts maintained, got the accounts audited. So do one more audit for income tax. Say I am unable to offer this much. Go with this. Then compare this with 115 JB. So this becomes redundant. Supposing normal provision is 4 lakh. The assessee may not be in a position to say I'll go with this, because books are available, audit is conducted, book results, adjustments, so to say 4 lakh earned. Having earned 4 lakh, credited to P&L account, taken to reserve. Thereafter saying I will only offer 2,70,000 would be a suicidal attempt. About the consequences we'll take up little later. In that case, 4 lakh will remain. 4 lakh to 6 lakh will compare. Whichever is higher, we will take up. So effectively, though technically one can say for a company it is applicable, this presumptive taxation would not effectively have anything to say for company. Either normal provision or 115 JB would apply. From current year onwards, a company can opt to get out of 115 JB and go with only normal provision by invoking 150 BAB. Similarly, section does not have any turnover restrictions. Even with 10 lorries, one can have 2 crore. Still, you can go under 44 AE. Nothing wrong in it. So what section says? Owned by assessee at any point of time during the previous year. That means if I got 10 vehicle in my name. 3 vehicle I take on lease. That 3 vehicle will not come. If I have 7 vehicle in my name, 3 vehicle I take on lease, 10 I am together running. So effectively, literally for 7 vehicle I should offer under this provision. But the form says whether you have owned it, you have hired it, you have leased it. For each of such vehicle you would like to offer under the same provision, form allows it. So Act says you should own the vehicle. Whereas form says whether you have owned it, hired it, leased it. All the owned, hired, leased vehicle put together, if it doesn't exceed 10, you go under the form. 120 months maximum you can key in, is what the form says. Now if I earn 10 vehicle in my name and another 5 vehicle I take, for that other 5 vehicle, can I go under 44 AD? The form suggests for your vehicle or up to 10 vehicle you come under this, over and above, same assessee. Form suggests you can go under 44 AD, but technically eligible assessee means an assessee doing this. Eligible business means as business other than business of plying goods carriages, plying, leasing, hiring goods carriages. That means that business itself should not come under 44 AD, but the form says for the balance vehicle you can go under 44 AD. Now form says these are the nature of activities. Either you can come under 44 AE, or when you are not owning the vehicle or more than 10 comes, for the same activity you can come under 44 AD. Renting of land transport equipment, packers, movers, forwarder or freight. So partly you can come under 44 AE up to 10 vehicle, over and above you can come under 44 AD is what form suggests, and it is possible, though the section does not allow that to happen. Of course, this is something which we have already discussed. For a time being, we can skip away. Now, depreciation shall be deemed to be given effect to, we have discussed. Quickly, 1 minute will take. Mr. A purchased a lorry for 20 lakh, 3 years, 17 March, 18 March, and 20 March, 19 March, he has offered under presumptive provision. And 19 April, he sold, and that's the only lorry he has got. It is continued business. So now 6.86 lakhs is the WDV on that April 19. He sold it for 7.5 lakh. That 0.64 lakh he has to offer under capital gains. That cannot be said to be included in the presumptive provision. He has to independently offer it as capital gain. Now, interestingly, this asset was held from April 2006 to April 2009. The asset is long term. Only the gain is short term. When asset happens to be long term, gain happens to be short term. Then one can think about the re-rolling benefit available in section 54 series, as well as the assessee can think about setting off of brought forward long-term capital loss against this, because the language of section 73 says, the 74 says, loss arising from transfer of a long-term capital asset can be set off against the loss arising from profit arising from transfer of a capital asset. So the asset should have the character of long-term capital asset. The income need not be having the character of a long-term capital gain to set off the brought forward capital loss. So therefore, this case, there is a long-term capital asset resulting in short-term capital gain. Therefore, if there is any brought forward long-term capital loss that can be claimed to be set off against this is something one assessee can explore, considering the language employed in 54 series as well as in 74 as the case may be. Now, if assessee has got 10 vehicle, 5 vehicle you would like to go under 44AE, others you would like to go by normal provision, not possible, is what this particular ruling says. And even if the turnover exceeds 1 crore, turnover is not a restriction in this provision, is what this says. And only one particular truck is there and it is used for own business, occasionally let out, assessee can say I will not go under 44AE, is upheld in this particular ruling. A quick cap of all the three provision, 44AE, ADA, AD, type of assessee, no restriction for AE. For 44 ADA, resident only can avail. For here, in the resident, individual HUF firm other than LLP can do. For when the income offered is less than threshold, for 44 AE, moment it is less, whether or not income exceeds basic limit, one has to necessarily consider for audit. Here, even if the income is less than 50%, only when it exceeds basic limit, it has to be liable for audit. In this case, even if the income is less than 8 or 6%, but subsection 4 should apply and income must exceed basic limit. And in case of partnership firm, for these two cases, further claim of interest and remuneration not possible. For this case, further claim of remuneration and interest subject to 40 small b possible. Now, whether the assessee can say, I will offer more than what is there in 44AD, welcome. Whether the assessee can say, I will offer only that much, even though income I have earned is something more. One can take that view, but consequences will take up when we are discussing section 68, 16 and series. All the deductions under section 30 to 38 deemed to have been allowed are claimed in full. Now, some vehicles are used for personal purpose. Can the officer invoke section 38? Saying, in the computation, you have offered this much, but I have got records to say you have used it for personal purpose. Can this be invoked? Answer is no. Section 28 to 43C replaced. Therefore, personal expense related disallowances cannot take place. The assessee previous year not under 44AD. Yes, first year of acquiring lorry resulted in loss, depreciation loss. Therefore, he has claimed loss. Current year, he would like to go under presumptive provision. Now, section 30 to 38 deemed to be given effect to in full. That means whether 32 subsection 2 is said to be given effect to. Section 32 subsection 1 current depreciation. 32 subsection 2 unabsorbed depreciation. Now we go by presumptive provision, all the deductions have been given effect to in full. That means all the brought forward depreciation is also given effect to. That means he cannot carry it over for future year. The income declared is after exhausting the brought forward depreciation, is one school of thought which has been endorsed in this judgment. It says brought forward depreciation loss is also said to be given effect to. But I am unable to subscribe to this theory for one reason. Section 32(1) talks about current depreciation. 32(2) talks about unabsorbed depreciation. Section 72 subsection 2 says before giving effect to unabsorbed depreciation, unabsorbed business loss needs to be given effect to. Only thereafter unabsorbed depreciation has to be given effect. So what is the order? 32 subsection 1, then 72 subsection 2, thereafter 32 subsection 2. Because of interposing 72 subsection 2 between subsection 1 and 2 of 32, 32 takes its seat after 72.2. That means it is taken away. So therefore, in case there is a business loss and then unabsorbed depreciation, business loss is to be given effect to. That means after presumptive income, we will have to apply business loss. Thereafter, unabsorbed depreciation. So effectively, 32.2 is taken out of chapter 4D, technically placed after 72.2. To that extent, 32.2 should not be said to be given effect to. This principle of introducing 72.2 in between 32.1 and 32.2, upheld by Bombay High Court in Shirki Construction Limited case, when the concept of profit and gain computed in accordance with chapter 4D be the basis for computing income under section 80 HHC. In that case, when this controversy came up, Honorable Bombay High Court in Shirki Construction Limited case categorically said, you will have to interpose 32 between 32.1 and 32.2, 72.2. Therefore, profits of the current year should alone be considered after giving effect to subsection 1 of 32 and not subsection 2 of 32. That principle has to be brought in. Unfortunately, in this case, nobody was arguing for SSE. Only revenues argument was considered. That might have been the reasons where this Bombay High Court judgment was not available for the benefit of the bench when this was decided. Therefore, one has to see how the law will be evolved over a period of time. Then whether the officer can invoke 40A3 based on the evidence, answer is no, because 28 to 43C already given effect to. Can the officer invoke disallowances under 40A1A, saying the assessee is liable for TDS disallowance deduction of TDS, but the assessee did not do, therefore 30% of that expenditure would be disallowed? Answer is no, deemed to be have been given effect to. But one line of caution, assessee would not be able to say, this year I have not deducted or I have belatedly remitted, this year you cannot disallow it, next year I belatedly paid, therefore I will take a credit of it. Assessee would not be in a position to blow hot and cold. The disallowance itself has not been taken place, you are quantifying it, therefore subsequent claim may not be appropriate in the total spectrum of the law. What will happen to evidences available to suggest disallowances under 43B? On a primary note, one should be able to say 28 to 43C replaced by presumptive provision, including 43B. Unfortunately, subsection 1 of all these three sections says notwithstanding anything contained in 28 to 43C. But 43B says notwithstanding anything contained in any other provisions of this act. That means 43B says put 43B here and all other provisions of this act in another basket. This will override all other provisions. Therefore, Honorable ITIT Panaji bench said, even for presumptive income, 43B has to be subsequently applied. After having applied presumptive income, disallowance under 43B cannot be objected, is what Honorable ITIT Panaji bench has mentioned. Now, interest and remuneration. Whether a partner can say interest and remuneration due or received from the firm by me is chargeable under section 28 clause 5. Therefore, it's a business case and it's an eligible business. Therefore, I will take up that as eligible business. I will offer only 8%. We have a direct judgment of the Honorable ITIT Chennai in Ananda Kumar case to say this is not acceptable. You will have to go by normal provision. But if the partner has got evidences to suggest that out of the money is due to him, he has incurred expenditure to earn this income by paying interest on the money borrowed, by applying, by hiring a driver for his car to go and carry out the business of the partnership firm, and you would like to claim all these things. By applying all these things, ultimately income falls below 8 or 6%. Actually, whatever is there, he can offer it subject to applying section 14A, because firm generates both taxable income and tax-free income. Therefore, section 14A may be to a certain extent applied on the expenditure part of it. But blanket offering only 80%, this ruling has not accepted this particular principle, going by the concept that the law is only for a small type people and therefore this should not be applied where a person has already got a deduction in firm and equivalent amount comes here. Factually, if the assessee has earned less out of this income, the assessee is entitled. Without any such evidences available, flat applying 8 or 6% may not be appropriate is what this ruling says. I was informed that for opposite also view also some rulings are there which very selectively the assessee should apply, because that in my personal view taking that as a rule may go against us in the long run if the matter gets escalated. Whether for a share trading business or a speculative business, considering the turnover as given in our 44A B guidance note, can we apply 44AD? Answer is yes, what Honorable ITAT Delhi has said. After going under 44AB AD, whether the assessing officer can go to verify the genuineness of the creditors, debtors, etc. This tribunal judgment went on to say this is not permissible because it's a presumptive case, you have to accept it. But all that is fine. Now, how much we have to consider for the purpose of source? The assessee says, I've got 80 lakh rupees in gross receipt or turnover. I'm ready to offer 10%, 8 lakh rupees. When 8 lakh rupees is the amount, how much we have to consider for quantum? Now, in that year, that assessee maintains the depreciation details as per Income Tax Act. Tomorrow, an asset is sold or a block becomes a negative. He has to ascertain how much is capital gain liable or capital loss to be carried forward. So that is allowable depreciation under section 32 plus the income offered. This put together would be available for giving credit to capital account or source purpose. Capital can be credited to the extent of net profit, but for cash flow, the depreciation and the profit declared should be taken up for the purpose. If the assessee for his cash flow takes as per his books whatever comes and again goes to computation and says I'm not claiming I've earned more than, therefore I will offer only 8%, may not appear to be a correct proposition, but AO cannot disregard the claim of depreciation for source purpose is what the Bangalore 8080 in this case has highlighted. Now, this case where the assessee has, after some point in time, continuously offering under 44AD, etc., after some point in time, the assessee is subjected to a proceeding under survey or an inquiry, etc., which go to suggest that income offered under 44AD year after year is something less than what he has physically earned and invested, and the evidences suggest that he has invested more. In that case, what would be the consequences? If it is subsequently identified, can the officer invoke section 68? Section 68 would say there should be an entry in the books. When the assessee says I'm not maintaining books, 68 may not apply. But what would happen to 69 series? Unlike section 68, 69 series does not require books of account. Without books also section 69 series can be invoked. So now there are ample evidences to say just assessee earned more in the past but offered only lesser income under 44AD or AE or ADA as the case may be. But evidence suggests he has got investment. The opening balance of bank and cash, the creditors opening, creditors closing, turnover, cash and bank balance closing, income reported. If we aggregate and reconcile all these things with the investments, we are able to say there is a gap. The investment of that year is not funded unless there is tangible evidence to say yes, loans. If they are not able to be proved, then the gap is said to be earned from a particular activity but not disclosed. Now, if the gap is somewhat minimal enough to aggregate with the reported income, and after considering the reported income and the shortfall put together, the profit earned is somewhat reasonable, something which could be considered to be earned from that particular activity of what the assessee was carrying on, then it could be said that it is an income not reported but not undisclosed. In order to trigger 69 series, the source itself should have been not known. Here the business is a source. From this business only the assessee has earned. He has earned 20%, he has earned 18%, he has earned 15%, he has disclosed only 6%. He has no other source, but this business could have definitely given him 15%, 20%, other factors, other comparable cases would suggest that this business could be in a position to give assessee this gap of 10%. He has already declared 8%. 18% is the gap, 10% is the gap. Totally 18 if you show his investment is matching. This 10 can be said to be unreported income from out of the known source. Therefore, it is considered as income otherwise not reported, chargeable to tax, but at normal rates. But if the investment in that year is so very high, and if you add it with the returned income and apply the percentage, the current year turnover vis-a-vis the income gap, income reported plus the gap put together goes to 60%, 65%, etc. In that case, a reasonable percentage of income can be said to be earned out of the current year business source. Balance income can be regarded as earned out of unknown source. If it is treated as unknown source, then the provisions of section 69 series will apply. When the source of the income is not explained to the assessing officer to his satisfaction, the provisions of section 69 would apply, 69 series depending on A, B, C. In that case, provisions of section 115 BBE would apply. Once 115 BBE applies, the rate of tax will get escalated 77.25 previously, now 78%, along with 6% penalty. And by the time the assessment order is placed, 33 months would have been over. So 110% would have been the amount otherwise the SC would be required to pay if this provision is invoked. Therefore, on a conjoint reading of 69 series and the provisions containing provisions mentioned in the presumptive sections to say assessee is entitled to offer more if he has actually earned more would suggest that it is the obligation on the part of the assessee to reconcile the income with investment of that year and see that sufficient income or source is available for the investment made, so that at a later stage assessee would not be ending up with invoking of section 69 or 60 other provisions of the law. And lastly, 1 minute, the limit for applicability of TDS provision previously disturbing and got rationalized by 2020, saying that last year 1 crore business cases, current year audit TDS would be required, and for the purpose of penal provisions for 269 SS, ST, ST, books are not criteria. If evidence suggests that assessee has violated, even without books, these sections can be invoked, is something one has to keep in mind. With this, I would like to end up my presentation, and questions left over can be taken up for our discussion. Thank you one and all for your patient listening.
Yeah, we can go to questions. Dilip bhai?
Yes, yes.
Yes.
44AA covers technical consultancy. Whether person engaged in giving HR trainings will be eligible. Assessee for 44 ADA.
Yeah, that screen what I have mentioned, if you are able to say technical consultancy, in that it is difficult to say HR consultancy will come. It is difficult. But profession, other cases, by and large, we would be able to bid. But technical consultancy, say, for HR, it is slightly difficult. 44 ADA may not be the appropriate provision. But by the scheme which we have seen, 44 AD would be a better case. Whatever income comes actual, that can be brought under 44 AD itself.
Fine. Next is explanatory memorandum of Finance Act 2016 states that section 44 ADA applies to individuals, HUF and firms only, but not to LLP. The schema of ITR also does not allow to select 44 ADA for LLP. This is to bring to notice of all.
But the section does not per se prohibit it, but intention at the time of moving the bill was only to this. But section as such, unlike 44 AD, does not have a specific language, is what I would like to say. But it's very good information which we can make.
Yeah. Next question is, a chartered accountant earned professional receipt of rupees 30 lakhs and in addition has received rupees 10 lakh as partner's remuneration from CA partnership firm, whether he can offer 50% of 30 lakhs or 40 lakhs. In other words, whether gross receipts referred to in section 44 ADA would include remuneration interest from firm. I think you have cleared that.
Yes.
Yeah.
This has to be independently handled. That
Yes.
should not be aggregated for the purpose of presumptive provision.
This next question is whether tax audit under 44 AD is tax audit under 44 AD is applicable for assessee whose turnover is less than 2 crores, but banking transactions are more than 95%, assuming profit offered is less than 6% or 8%. I think it is 44 AB.
Fine.
AB.
The question is
Yeah, AB.
44 AB class A proviso.
Yeah, yeah.
So now for that assessee per se 44 AD would not apply. But to link it with this, now assuming for a moment previous year the assessee was in 44 AD, current year he opts out. For a moment let us presume he opts out, and this year his turnover is falling somewhere in between 1 to 2 crore. Now he opted out, therefore for him subsection 4 would apply. Now we will have to go to subsection 5. Subsection 5 says you are opting out, you have to get the accounts audited so long as your income exceeds basic limit. Now this provision comes under 44 AD subsection 5 coupled with 44 AB class E. Person who has got more than 95% receipt and payment in banking channel would be away from the requirement of audit only if he comes under 44 AB class A, not under class E. Therefore, a person who is applying, who is getting caught under 44 AB class E, read with subsection 5 of 44 AD, may not be able to get the benefit of 1 to 5 crore, everything having 95% above, having only non-cash transactions, may not be able to say audit is not applicable for me, because that proviso is placed below class A of 44 AB. It is not placed for the entire classes of 44 AB. Therefore, person coming under 44 AB class E may not be able to avail that benefit.
Next question is, suppose a person has a turnover of 1.5 crores and shows an income which is 4%. Also, he has no cash expense and receipt. Whether tax audit is applicable because he is showing profit less than 8%.
Person has got 1.5 crore, shows income less than 8%. Also, no cash expense. Tax audit. A person having 1.5 crore, the question is not clear whether previous year he was already under 44 AD or otherwise. For a moment, let us say previous year he was not under 44 AD. The previous year 80 lakh was the amount and therefore he didn't pay normal provision. This year it has crossed 1 crore. Previously not under 44 AD, subsection 4, 5 class E of 44 AB not applicable. Now 1.5 crore business in gross receipt or turnover exceeding 1 crore, 44 AB class A. Proviso says more than 9%, more than 95% non-cash transaction. If he is satisfying the proviso, 8%, 3%, 4% irrelevant. Whatever book, he can go with book results without audit. Nothing wrong in it. Previously he was under 44 AD, option 2. If he was previously under 44 AD, this year is opting out. Turnover is falling in 1.5 crore. Previous year 1.25 crore, but he went under 44 AD. Current year 1.5 crore. Not be able to offer 8%, therefore he walks out. He will fall under 44 AB class E. Therefore, for him, that 5% category of cash, non-cash, etc. would not apply. He has to necessarily get the accounts audited so long as his income exceeding basic limit.
So the proviso which is there in 44 AB, which is placed last, means if you are 44, if those who are covered under 44 AD, they do not get the benefit. So we have to take which proviso is beneficial to the assessee, or suppose when you are having a turnover of 1.5 crore and you satisfy that proviso conditions of cash receipts and cash payments, so you can get the benefit and not enter into 44 AD?
Yes, naturally, because 44 AB class A proviso says this for this assessee 1 to 5 crore satisfying conditions not required to get the accounts audited.
But whether you can say that the proviso which is placed at the end, it applies to all the clauses?
Yeah, proviso placed at the end. That is, you need to say first proviso to section 44 AB says a person who offers income under 44 AD subsection 1, for him the 1 crore limit will be substituted by 2 crore.
Yes.
That case, a person must first offer under 44 AD subsection 1. For that person only, from 1 crore to 2 crore, section 44 AB does not apply. If a person does not offer under 44 AD subsection 1, he is not there under 44 AD subsection 1. Therefore, for him, this proviso does not apply. First proviso to 44 AB does not apply.
So one has got the benefit if he's having a turnover between 1 crore and 2 crore and has no cash transactions, then he gets the benefit of this.
Even if he is not going to offer under 8 or 6%,
yes,
then
he gets
still,
the benefit of this.
Yeah, he is not coming under 44 AD subsection 1. First proviso does not apply, but 44 AB class A proviso applies to him.
Okay, okay. I think the other questions we have already tackled and discussed. Any other questions there? I think any show of hands is there. Sanjay? Yeah, one show of hand is there. Sanjay, you're there? Sanjay, can you unmute? Hindi wali Prakash? One second, sir. I think the person is left, I think. Fine, fine. Yes. Any other questions, Sarmaji?
No.
Fine, sir. Yeah, yeah.
Yeah, yeah.
Yes. Excellent analysis.
No, you got that proviso clear. Na? Otherwise, you can read the proviso and can just ask him again. There are two provisos. One is after clause A and one is at the end. You want him to read that proviso?
Yeah, we can again discuss it if you want.
Yeah, Mr. Ramnath, you can read that proviso and explain that. Because,
Section 44 AB clause A has a proviso to give benefit up to 1 to 5 crore subject to A and B satisfied.
Yeah.
And first proviso to section 44 AB as such says a person falling under 44 AD subsection 1. That is, subsection 1 means offering 8 or 6%.
Yeah.
That person from 1 crore to 2 crore is not required to go under 44 AB.
Yeah.
So a person who is coming under, who has already availed 44 AD subsection 1, from 1 to 2 crore, there is no need for him to get the accounts audited.
Right.
If a person is not coming under 44 AD subsection 1, he is not willing to offer under that particular subsection 1 at all, we'll take them away. Then from 1 to 5 crore subsection 44 AB class A proviso would apply, so long as he satisfies the condition of less than 5% cash transaction both on payment and collections. He would be entitled to get the benefit of proviso below class A. Therefore, he will be entitled to take the benefit between 1 crore to 5 crore.
Yes, Sarmaji, you got it?
Yeah.
So means he's got a benefit if he's having a turnover between 1 and 2 crores, not to get it audited and not to offer under 44 AD. Right,
Dilip ji, if
yes.
I were to say whether 44 AD first of all a benefit. Now, if
he gets he takes the benefit under 44 AB because he is having a non-cash transaction. I'm saying that.
Yeah, 44 AB non-cash cases from 1 to 2 crore, 1 to 5 crore he will get benefit.
Yeah, 1 to 5 crore, yes.
Not necessarily 2 crore, up to 5 crore also he'll get benefit.
Yes, 1 to 2 crore, that's because he is not opting for 40. He is not opting for 44 AB. Means that 44 AD is not mandatory for him.
Yes. And
because he has got the option.
Dilip bhai,
yes.
In this, if supposing he is covered by 44 AD4, then he has to get it audited.
Yes.
Only
absolutely.
if only if it is not falling in 44 AD4 and 5, where he has already taken benefit, then he can claim benefit of subclause 1, subclause A provision.
So once you have already entered into it, so then it is on where you come out of it, then you are hit.
Yeah.
The proviso class A to the proviso to class A would not help them.
Yeah, would not help them. Agreed.
Okay. There are some show of hands. 1 minute. I'll just check up. Velankar, just a minute. Yes, Mr. Velankar, you can unmute and ask your query. Mr. Velankar?
You have to unmute.
No, he has the option to unmute.
Vinayak Velankar. Raghunath. Yeah.
I think he has raised a hand, but I think it may be by a mistake. That way, I've given him the option to unmute, but he is not doing it.
There is one query by Ms. Divya. The cinematographer professional income is less than 50 lakh. 44 ADA can be applied, and if he offers minimum 50% as profit, he need not maintain books of account, also need not get it audited. This is what comes out of the provision. Also, if we offer anything less than 50%, we will have to maintain books and get it audited, in spite of income being less than 50 lakh. Appropriate. Yes, that is what the law says. In all professional cases, income less than 50%, if somebody is ready to offer, no need to maintain books, get it audited. If it is less than 50%, prove your claim that it is less than 50% by maintaining books and get it audited. What the section suggests, only exception would be where the income itself is going to be less than basic limit.
Yes, Sharmaji?
Yeah.
Yeah.
No, one thing you have said that other professionals, other than specified profession, they can take benefit of 44 AD. But then, as you yourself said, the section talks of business. So how you deal with that?
No, section talks of business.
Yeah.
But what happens? The subsection 6 says comfortably the 44 AA subsection 1 profession would not be eligible.
Okay.
So 44 AA subsection talks about specified professionals.
Yeah.
All other professionals are coming under subsection 2. Therefore, one view is canvassed to say, why not we take the benefit of 44 AD for subsection 2 cases? The courts prescribed also say these are professional, but they are entitled to come under 44 AD. The eligible professionals entitled to come under 44 AD is not linked to 44 AA subsection 1 11 cases. There are others, advertising, etc. So those cases, 44 AB, 44 AA subsection 2 professionals, but still they are availing the benefit of 44 AD. Very technically, they must not. Going by literal language of law, they should not. But section says these people can also, the section does not say, but the form, schema, the code, all that say you can come. But all said and done, if the actual income is offered, whether it is under 44 AD or otherwise, it is not going to trouble them. If something less is offered in the long run, that is going to trouble them. They can go under 44 AD technically by applying subsection 2 and the code prescribed in the written. By interpretation of the language of law, one should not take that advantage. By the schema prescribed, it is eligible.
Okay. Any other question? Otherwise, we can call it a day.
No questions, Sharmaji.
Okay, right.
Yeah.
So, friends, you will all agree with me that today's presentation by Mr. Ramnath, I can only say it was.
Sharmaji, 1 minute. There is one question at least typed. Whether deduction of TDS provision will be applicable in case of presumptive taxation. Mr. Mehta Manish Sriwal will answer. If the turnover of the previous year of this particular individual HUF, previous year turnover, business turnover crossed 100 lakhs. Current year, even though he is willing to come under TDS provision, he willing to come under presumptive provision, he has to follow TDS law for those 5 sections. If it doesn't follow, 40A 1A will not be applicable because that is embedded in the presumptive number. That does not by itself mean the provisions of TDS chapter would not be applicable to him. Honorable ITIT Bangalore categorically said, merely because 40A 1A is not applicable, the penalty provisions under TDS cannot be avoided. Therefore, last year turnover exceeded 1 crore. This year assessee would like to come under presumptive provision, individual HUF, 5 sections, 194A, 194C, 194H, 194I, 194J, wherever applicable, he has to follow TDS provisions, failing which under presumptive number there will not be disallowance by invoking 40A 1A. However, penal consequences as per chapter 7 TDS related provisions cannot be avoided. Chapter 17B read with 271C etc. will continue to apply on this particular assessment.